Morning, students. In the previous class, we discussed about trading organizations and non-trading organizations. Okay, trading organization, the trader always look after to earn profits, whereas non-trading organization they look after to serve the needy people or financially weak people or below poverty line. Okay, there are various accounts to be prepared in trading organizations and non-trading organizations. In trading organization, basically first we enter the transaction, journal entries, later ledgers, posting ledger, later different types of accounts like cash account, purchase account, sales account, purchase returns account, okay, sales returns account, journal proper. After that they prepare final accounts. Final accounts includes trading account, the profit and loss account, the last one is balance sheet, like that. Later coming to non-trading organization, prepare some accounts, final accounts. The first one is receipts and payments account. Second one is income and expenditure account. The next one is balance sheet. Okay. The previous class we learned about non-trading organization, capital expenditure, revenue income, like that. Okay. See here, just now I said that what are the accounts to prepare in trading accounts. That is, see here, the first one is trading account. Second one is profit and loss account. The third one is balance sheet. Okay. In case of final accounts of non-trading consists. In non-trading organization, they prepares three account. First one is receipts and payments account. Second one is income and expenditure account. The third one is the balance sheet. See here, the first one is receipts and payments account. All cash transactions are entered, both revenue and capital receipts and payments entered. So, irrespective of the year means there is no matter of past financial year or current financial year or future financial year, whatever it may be, no matter whether we received cash or not, that is the only matter. If we received, we have to record the transaction in receipts and payments account. Okay. In this, there are two types of revenues are there. Uh, okay, revenue and capital receipts. Already we discussed in the previous class. So what is meant by revenue and capital? Revenue item is belongs to either revenue income or revenue expenditure. It belongs to only the a particular financial year. Whereas coming to capital, this is for not for current year, this is for longer period. Okay, revenue items are recorded in income and expenditure account, receipts and payment account. Whereas capital accounts, capital items or capital transactions related to that recorded in the balance sheet. Okay, coming to receipts and payments account, both revenue and capital receipts and payments are entered. Clear? All receipts posted on debit side. Receipts are posted on debit side. In which account? Receipts and payments account. First column should be receipts, second amount column, the third one is payment column, the fourth one is amount column. Okay, all receipts are posted on debit side. Next, coming to payments, that should be recorded in credit side, means third column. The amount of that item should be posted in the fourth column. Clear? See here, these are comes in receipts side, payments account. Next, coming to income and expenditure account. Income and expenditure account. Already we know that only for a particular year or particular financial year, items are recorded in income and expenditure account. Okay, revenue receipts and revenue payments are only entered in income and expenditure account. Okay, revenue expenditure is to be debited. Revenue expenditure is to be debited. Why? In income and expenditure, the pro forma is like that. There are 4 columns in income and expenditure. The first column name is expenditure, second amount column, the third one is income, the fourth one is amount column. Means debit side is expenditure, the credit side is income. Okay, see the first point, the revenue receipts and revenue payments only entered. Revenue means, already we discussed in the past class, or just now I said, revenue means the item which is considered as a revenue receipt or payment is belongs to only for a particular financial year. Only for the particular financial year, that item should be recorded in income and expenditure. Other than that, items does not recorded in income and expenditure account. Revenue expenditure is to be debited. Okay. Next, revenue receipts to be credited. Only recurring receipts and payments entered. Revenue receipts and payments of the current year, financial year only entered. Already we discussed. Already just now I said. Okay. Frequently we are discussing revenue, capital, like that. Revenue means, see here, 5th point. Once again I am reading. Revenue receipts and payments of the current financial year are only entered. So see here the sum of the important items peculiar to non-trading concerns means some of the items which are frequently used in non-trading organizations. The see here some of items are listed here. The very first one is the subscriptions, donations, legacy, life membership fees, honorarium, entrance fees, sale of sports material, sale of old newspaper, sale of old assets. Other important items of non-trading concerns: endowment fund, other revenue receipts, receipts on consumable items, purchase of consumable items, revenue expenses, other capital expenditure. Okay, these are the items should be recorded in the above accounts or revenue items, capital like that. The see here subscription, major source of income. Subscription is a major source of income. Recurring in nature means it is to be added year by year. It is a receipt means it is income to organization. It appears on the debit side of receipts and payments account, appears on the credit side of income and expenditure account. Clear? So see here, donations, it is received as a gift from person or firm or company. Example, land donation to iBank. Donations are nothing but it is a income is received as a gift from a person, means a individual person or a organization or a company. For example, donations, it is in the form of land donation to iBank. Treatment depends on its nature. It can be specific or general purpose. So see here, there are two types of donations are there. First one is general donations and specific donation. Next one, specific purpose donation is capitalized, so it should comes under balance sheet, means the item should be recorded in the balance sheet in the liability side. Coming to general purpose donation of small amount is revenue receipt is to be credited to income and expenditure account. Means general donations recorded in income and expenditure, whereas specific means specific particular donation, that item should be recorded in the balance sheet on liability side. General purpose donation of large amount is capitalized. Coming to legacy. It is a rare item, means which is not frequently occurred. It is a gift of personal property by will. It is a gift of personal property by will. Treated as capital receipt and not posted in income and expenditure. It should be posted in balance sheet in the liability side. Life membership fees means once we paid to the membership, it should be life. It should be existed for the lifelong. Means life membership fee. Members are required to pay membership fees annually. Instead of annual subscription, life membership fee is paid in one single payment unless otherwise instructed to be capitalized. Honorarium amount paid to guest lecturers or professors for giving their lectures to the members. Okay, they will expect some money from us, so it is called as a revenue. Appears on the credit side of receipts and payments account. Appears on debit side of income and the expenditure account. So coming to entrance fees, the person who entered newly in the non-trading organization, he has to pay fee. It is called as entrance fee. For entering, we are paying money. It is called as entrance fee. It is received from new members. Received from new members. The posted to liability side of balance sheet, if capitalized, if entrance fee is to be capitalized, should be posted in balance sheet on the liability side. If it is taken as revenue, it should be posted on expenditure side, income side, income and expenditure, that is credit side. Next one, sale of sports material. Sports material is an asset. Sports material is an asset. Sale of sports material treated as revenue income. Sale of bats, balls, old nets, or some example. It should be credited to income and expenditure, means that should be posted on the income side. Coming to sale of old newspapers, this is also income to our organization. It is revenue income credited to income and expenditure account. The sale of old assets. Furniture is an example of old assets. Furniture is a capital receipt. For that, we record this item and treat it as capital. Should be recorded in balance sheet as a liability. See here, sale of furniture is a capital receipt and not posted to income and expenditure. Okay, capital items are always posted in balance sheet only. Revenue items are always posted in income and expenditure only. That is the formula. Okay. deducted from the asset in the balance sheet, the liability side, asset side. In profit and loss account, sale is credited, debited to income and expenditure account. Endowment fund, permanent income source to the concern treated as capital receipt, is posted to liability side of the balance sheet. Next, other revenue receipts. It includes rents. Rent is also income. Proceeds from entertainment means by organizing a entertainment show, we are getting some money to our organization, or means non-trading organization. It comes under revenue receipts. Concerns means skits, some skits to be performed, and interest on investments. Okay, whatever the investment are there, on that we are getting interest monthly or annually. It treated as the revenue receipts, and it should be credited to income and expenditure. Coming to receipts on the consumable items, treated as revenue receipt. It includes amount received on sale of bar material, sale of foods, sale of cigars, sale of cards, sale of medicines. These are all credited to income and expenditure account, credit side, that is income side. Next, purchase of consumable items. Okay, purchase of above mentioned items treated as revenue item, posted to income and expenditure account. Adjustment are made for purchase and sale of consumable items. Any amount payable to supplier and value of stock the items. Net result taken to income and expenditure account, posted on asset side of balance sheet, the value of stock in hand. Other revenue expenses. See here, it is an expenditure paid for day-to-day activities. For example, salaries, wages, taxes, rent, printing and stationery, subscription to newspapers and periodicals, advertisements, interest, refreshment expenses, expenses incurred for maintaining fixed assets, repairs, depreciation. Other capital expenditure, purchase of books, furniture, investment, building, etc. or appears in the balance sheet. So see here, some illustration is given here. Explain how the following items are treated in case of non-trading concern. Charity fund, rupees 10,000. Charity is paid 3,000. Prize fund, rupees 25,000. Interest received on prize fund investment 1250. Prize paid 1200. See here, receipts for cricket tournament rupees 2,800. Cricket tournament expenses 3,200. Proceeds from benefit shows rupees 5,600. Benefit show expenses rupees 3200. Tennis match expenses 900. So see here the solution for the above problem. The see first one is the charity fund is a specific period. Hence charity is paid for 3000 and deducted from charity fund 10,000 and the balance of charity fund 7,000 shown on the liability in the balance sheet. Next, prize fund is a specific fund, means it comes under, okay, hence interest of income rupees 1250 arising from its investment is to be added prize fund 25,000, that is 26,250, and from the total prizes paid 1200 are deducted. The balance of prize fund is 25,050, then shown on the liability side of the balance sheet. So see here solution and notes. Continued, see here. Receipt for cricket tournament. There is no specific fund, but receipts are for specific purpose. Hence, the receipts for a rupees 2,800 being lesser and are deducted from the expenses 3,200, and the net amount of rupees 400 is debited to income and expenditure account. Okay. Solution. Benefit shows since the receipts of rupees 5,600 are more than expenses of rupees 3,200, the net receipts of 2,400 credited to income and expenditure as proceeds from benefit shown. Tennis match expenses being an independent expenses, the entire tennis match expenses rupees 900 is debited to income and expenditure account. The summary what we have discussed, see here, all types of incomes and expenses irrespective of the year, whether it is previous, current or next year, they are shown in receipts and payments account. All the receipts are shown on debit side and all the payments are shown on credit side. Only current financial year's revenue expenditure is shown in income and expenditure account on debit side. Only current financial year's revenue income is shown in income and expenditure account on credit side. Donations and entrance or specific types of accounts, they will be treated as capital income and posted to balance sheet on liability side unless and otherwise specially mentioned as revenue income. Summary here, see, subscriptions, donations, legacy, life membership fees, honorarium, entrance fees, sale of sports material, sale of old newspapers, sale of old assets, endowment fund, other revenue receipts, receipts on consumable items, purchase of consumable items, revenue expenses, other capital expenditure. The see here, which is there. The first question is final accounts of non-trading consists of what? Trading and profit loss account A, B cash account and bank account, C receipts payment account, income and expenditure or balance sheet, D none of the above. C is the correct answer. That is revenue, it prepares receipts and payments account, income and expenditure account and balance sheet. Receipts and payments account contains which items? Revenue receipts, Capital payments, revenue and capital receipts side payments, none of them, only revenue receipts. Okay. In income and expenditure account, we have to post only what? A. Capital receipts, B. Revenue receipts, C. Revenue receipts and payments, D. None of the above. We record only C, that is revenue receipts and payments. Next, revenue items posted to debit side of the receipts and payments account are credited to the income and expenditure account. Revenue items posted to debit side of the receipts and payments account, it should be recorded. Yes, is correct. A. The frequently asked questions, briefly explain the following terms: legacy, donations, entrance fee, etc. Okay. See here, once again I am repeating. The subscriptions are major source of income. It is a major source of income to our organization. It is recurring in nature, must be, it should be added. Recurring means added. It is receipt. It should be recorded in receipts and payments account, and should be recorded in income and expenditure account. Next, donations. Donation is received as a gift from others, either from person or firm or company. Example, land donation to iBank. Next, treatment depends on its nature. It can be specific or general. General purpose, we can use the donation amount for any purpose, whereas specific donations means it is used and the money is spent for that purpose only. Okay. Specific purpose donation is a capitalized balance sheet shown in the balance sheet. General purpose donation is recorded in income and expenditure account. Okay. Legacy, it is a rare item, means it is not frequently occurred. It is a gift of personal property by a will. Will means voluntarily they give a gift their assets, okay, property to our organization, means non-trade. It treated as capital receipt and not posted in income side. It should be recorded in balance sheet. Life membership, once we paid fees as a membership in the non-trading organization, it is called as a capital receipt. Why means capital means it is for a longer period. Once we paid, we need not to be paid year by yearly, annually. Okay, it should be recorded in annual balance sheet. Honorarium is a revenue receipt. Amount paid to the guest lecturers or professors for their giving lectures to the members. For that, we are paying money to that professors and lecturers. Entrance fee. Annually, we have to pay some amount to the organization as entrance fee. That should be recorded in income and expenditure account. Credit side, that is income side. Selling of sports material is an asset, should be recorded revenue item and posted in income and expenditure credit side. Sale of old newspaper means we are getting money, should be recorded in income and expenditure account, should be posted on credit side of income and expenditure account. Sale of old assets, capital receipt, okay, should be posted in balance sheet. Endowment fund should be recorded in balance sheet on liability side, means it is a capital fund. Other revenue receipts comes under posted in income and expenditure account, that is income side, that is credit side. Receipts on consumable items means consumable item from by selling the consumable items we are getting the money in receipt income, we record income and expenditure credit side. Purchase of consumable items means it should be recorded is a revenue receipt, revenue payment. Revenue item should be recorded income and expenditure debit side, that is expenditure side. Purchase of consumable items, net results to be taken in income and expenditure account and posted in balance sheet, the value of stock in hand. Revenue receipts, it is an expenditure paid for day-to-day activities, for example, salaries, wages, all whatever mentioned in this, taxes, rent, printing and stationery, subscription to newspapers, periodicals, advertisement, refreshment expenses incurred, maintaining fixed assets, repairs, depreciation. Okay, recorded in income and expenditure. Other capital expenditures should be recorded in balance sheet. Purchase of books, furniture, investment, buildings, etc. The illustration 1 already we discussed. Okay. Thank you.